What's going on, my friends? Vitaly Dubin is here, and welcome back to another episode of today's In Crypto Show. Guys, today will be a short and sweet one because you already know it. Bitcoin just crossed $19,000 for the first time in the last 2 months. After all of this drama and saga that was with FTX exchange, Bitcoin nosedived from $21,000 to the lows of $15,500. And just like yesterday, I pointed out, we are very likely to go and hit this line that I drew in yesterday. And there we go. This is where we are literally trading right now in this box of $19,000. So this is the area where we are likely to hit some resistance from Bitcoin right now, because before it was a very strong level of support. You can see it right there. 1, 2, 3, 4, 5, 6, 7 times it has been supported since June 2022. So once this support was broken, now this area can act as resistance. So it would not surprise me that right now we're going to see a little bit of correction in the price of Bitcoin, maybe to retest the $18,000, right? So the market can cool off a little bit. But if we're going to see this behavior over here, I'm going to show you right now. If we're going to see this behavior of the prices going to consolidate around $19,000, maybe go a little bit lower, then go back to 19,000, go a little bit higher, then go back to 19,000. Maybe we'll create here some kind of a ascending triangle here, and we'll be testing it several times, the $19,000, then boom. The likelihood that Bitcoin is going to take the $19,000 and go above that is pretty high right now. But at the immediate short term, I would say we are in a little bit of danger here, because we approached right now literally a very strong level of resistance for Bitcoin, which might see, and you can see on the RSI on daily. Right now, we are here in a heavily overbought area right now. That we have not seen this level of overboughts ever since January 2021. That's how much overbought we are right now on a daily basis. So take this into consideration, and if you are a short-term trader, you might want to secure some of your profits and look for better entries. Otherwise, if you are DCAing, if you're long-term invested into Bitcoin, you don't need to be worrying about the short-term anyway, because the likelihood of Bitcoin going much higher can illustrate probably the best the monthly chart. The monthly chart is printing a very nice bullish engulfing candle right now. Amazing candle, and that means super bullish for Bitcoin. Now we got the US report showing CPI, the inflation index is actually as anticipated. It's actually lower. It's actually slowed. So it's good news for the markets. We can see the US inflation falls to lowest in more than a year. So it's slowing down. Now, the reason why it's slowing down, because interest rate is so high. It takes now for people, to spend more money on things like a mortgage, right? So because of that, maybe economy is slowing down a little bit, but we're seeing the effect of the inflation is there, and it's right now at 6.5%, which is why the markets are reacting nicely. What else is on the news today? We see new post from Sam Bankman-Fried, essentially, that just posted it today right here. FTX pre-mortem overview, and he essentially in a new post, he denies stealing FTX funds. He basically says, I didn't steal the funds. I certainly didn't stash billions away. And he said Alameda lost money due to market crash. It was not adequately hedged for. But here's the thing. Here's the thing. He is alleging that the firm, the trading firm, failed sufficiently hedged in the market exposure, right? But what doesn't make sense is why he is comparing to lenders like BlockFi, Voyager, like they've been lending this money, because he shouldn't be lent out at all, because customer funds of FTX is not a poor risk management. They shouldn't be like lending out customer funds at all, regardless of risk management. Yes, funds were stolen. So there you go. He had this post here. No funds were stolen, but yes, funds were stolen because they were not supposed to lend this money in the first place. So the story develops. We see now that Twitter is working on a new coins feature powered by Stripe that will allow it to financially rewards good content on the platform. So that's really good for content creators and overall for Twitter, because if you are on Twitter, Twitter may be the first platform like this where if you create good content, you can be actually financially rewarded for it from the users. Imagine Facebook are going to see some kind of Facebook coins or whatever, right? Or Instagram coins to be rewarded for great content. So it's very nice development. Following up on Digital Currency Group that is in crisis, that owns a lot of money to Genesis. So now they want to sell some of their venture portfolio to cover the $3 billion debt. But in any case, that's good if they sell out some of this in order to cover and serve the clients and preserve the assets. So that's good. And maybe that's the reason why Bitcoin is pumping so much, because you know, it's just they're selling their asset, they're covering the debt, and it'll be fine. But what's not so fine is that right now the SEC charges 2 crypto platforms with failing to disclose the risks. So now Gary Gensler is coming and hammering Gemini and Genesis and the Earn program for 340,000 users that use the Earn program. And he's coming and saying, hey, we are the SEC government. We're essentially charging Genesis and Gemini for the unregistered offer and sale of crypto asset securities through Gemini Earn. But the thing is they're always coming after the fact. They're always coming after it has occurred. And it doesn't really help the users right now who are using Gemini Earn, because it has one big, another giant stone that has been thrown to them. And it's not actually protecting investors like the SEC is essentially designed to help protect investors. But no, they were very aware of the Earn program a year and a half ago when it launched. Why they're coming now when things are struggling? So there you go. They're always coming late. They're always like after the fact. They're coming and saying, no, you cannot do this. Not before the fact. And finally, I want to share with you, Ethereum hits a 500,000 validator milestone. 500,000 validators on Ethereum network. Wow. Validator must deposit 32 Ethereum, roughly $45,000 to run a dedicated staking node. So we have 500,000 active validators. That's crazy. Kudos to Ethereum. Great job. And that's what I have for you today, guys. I hope you have an amazing Friday. And I will see you in the next episode of Today in Crypto Show.